going to be looking into insurance. A kind of it is marine insurance.
Yep.
And I'm actually interested in knowing what, all this is about and how you can actually get into it. And there have been a number of difficult conversations that we've had this morning, but that to say that we will not continue having those, then I think is to be foolhardy. So we continue with the conversations as we have them. And so we get into our final one for this hour, whereby, like I said, we'll be looking into marine insurance. And joining us in the studio, in the hot seat of the Situation Room this morning, is Dennis Karanja. He's the General Manager, Regional Business at the Liaison Group. Good morning to you, Dennis.
Good morning to you.
How are you doing?
Very fine.
Karibu sana. And thank you for joining us in the hot seat of the Situation Room this morning. Marine insurance is what we're talking about, and I guess you'll let us know into all of this and what it means. But before we do that, as you may know, Dennis takes us around the African continent every week. We come from a different country every week, and he shares the proverbs. We'd love to get your interpretation of this one from the country that he's in.
Yes.
Okay.
Today we're in Mali. Beautiful country. And you think about Mali, the vast resources. So you talk about the gold that they do have and how that is helping push the economy. There is also a UNESCO World Heritage Site there, where it is a mosque that is built of bricks and mud and stands out when you get there. It's just an architectural marvel in terms of the individuals at the time and how they built that just strikes you out. But let's go to the proverb that we get. Indecision is like a stepchild. If he doesn't wash his hands, he is called dirty. If he does, he is accused of wasting water. How would you interpret it?
Thank you, Dennis, my namesake. In this world, you have to be decisive. So if you do not make a decision, either way, you're wrong. If you make a decision, like today, we'll be talking about marine insurance, risk management. If you do not make a decision, then you can never be right.
Yeah. Well said.
If you never make a decision, I'm actually writing that down.
If you never make a decision,
you will never be right.
Yes.
Okay, well, interesting. Let's see how we get into this conversation this hour. First of all, tell us, marine insurance. Who's getting marine insurance in the first place? We start there and then we can get into what it's all about.
Thank you. So marine insurance, the person who should be getting marine insurance is anyone who is doing importation into the country. So no country is self-sufficient. We have to do a lot of importation. So for you to be able to bring goods in Kenya, marine insurance has been localized such that you need to get an insurance company in Kenya to give you a marine certificate. And that certificate will be used for clearance. So it is anyone doing importation for goods coming into the country. Yeah.
Okay. Now, so these are large companies, small companies. Who exactly are we talking about here?
All right. It's actually everyone. But do you know the large companies have been taking up marine insurance for the longest. The large companies, those sectors that are quite sensitive, like, for example, pharmaceuticals, they have been taking marine insurance because it's part of their risk management. If you are a CEO of a company that is doing importation, how would you explain to your shareholders that you lost a consignment of 100 million, for example? Because we didn't have insurance. So the large companies have been taking it up. The smaller ones and the individuals, they have been taking insurance on case-by-case basis. Like right now, you know what has been happening at the Strait of Hormuz.
Yep.
Now, the demand is quite high right now. But now, with the new reforms in the marine cargo insurance sector, now everyone will be required to take up insurance so that we can build our resilience as a nation.
Everyone. So let me assume, for example, when you say everyone who's into the import business, say I'm a one-timer importing, say, a television just for my house from China, right? So is that as well, like even for those who are importing small things, can they as well take this insurance, or is it just meant for bulk importers of goods into the country, or anyone, even if you're buying, say, a phone that is coming by ship?
Yes, if you are importing a phone, it's going to come either by air or by sea. So already automatically it falls under marine insurance. And even for that phone, the premium will not be much. So it's also good as a risk management measure. When you sleep at night, you know that if you don't get your phone, you'll be compensated and you can import a new phone. Yeah.
Right. Okay. So before we look into like why you should buy insurance and who buys it and all of that, there are some reforms that have taken place in the sector, isn't it? If you had 1 minute, as we're looking at it, to convince a skeptical importer, that this reform is a good thing, what would that be?
Okay. That the reforms is a good thing for a specific importer, yes. I would be able to convince them because you see, risk management is a proactive thing. You know that you are importing a consignment and anything can happen in the sea or even in the air for air transport. So you see, if there is a storm or there is a war, like what we've had in recent times, the premium that you pay for marine is not much. But because of the law of large numbers, you can't get compensation for your entire cargo. A ship can sink, it can disappear.
Can be blown up.
Exactly, anything can happen. So if you have a consignment, it is safer and it's a good practice to always have an insurance in place. Number two is that now with the digitization of marine insurance in Kenya, it is now easier to take up a marine policy, even from your phone, from the clearing agents. It's just a matter of 2-3 minutes. You have a marine certificate, it's digital. You don't have to visit your insurance company or your insurance intermediary. So things have been made easier, and it's going to be important for everyone.
I think one thing as well in the reforms that perhaps Kenyans are asking is the fact that whenever anyone talks about insurance, it has always been the agreement that we have, where we have, rather there have been allegations of hidden terms and conditions within the policy that one is speaking that has made many to a little bit stay away. So in terms of reforms then, and even as we ask more Kenyans to jump on into this, what's the guarantee that the terms and conditions are open for everybody and is easily accessible and understood?
Yes, that has been a concern for the longest, not only in Kenya, but in most insurance industries worldwide. Insurance is a contract. It's a contract where an insurer guarantees you that if this and this happens, I'm going to compensate you for the loss. So with that, because of the contractual nature, there's a lot of wording involved in insurance contracts. Now, what happens is that we have our regulator, Insurance Regulatory Authority, IRA. So IRA does supervision. They make sure that customers are protected, such that if you do have an incident, the wording should not be interpreted against you, or if a claim is payable, as required by the standardization of insurance policies in Kenya, that will be compensated. But also, that is where insurance intermediaries like Liaison Group, that's where we come in. Having been in the business for the longest and as qualified risk and insurance consultants, so we already know the wording. So we are able to break that wording down to clients and to tell them what is the meaning, to show them what is the meaning of this, what is the impact. And that makes it easier for clients to understand. Think about it as your lawyer. We all are supposed to be aware of the legal terms. But since it's not our main area, you go to a lawyer. The lawyer is going to advise you that this is the interpretation of this. This is what you should do to protect yourself. So that is why we are here as a Liaison Group, as insurance brokers, as insurance intermediaries in the industry.
So there's a new law, right?
Yes.
Okay. What does this new law say that could have a direct impact on importers?
So the new law is about enforcement of the localization of marine cargo insurance. So localization means that first, it is compulsory to take up marine cargo for all imports coming into the country. So it is compulsory, which means that for KRA, through customs, to clear your goods, they need to see a marine certificate. So that is one. The marine certificate has to be with an insurer registered in Kenya, because before, clients used to insure from overseas.
Yes.
You pay for the cost of goods along with the insurance, but the insurer is on the other side. So the new law is coming to make things easier. First, to help us localize it here, so that it's also easy to pay claims, and to ensure that everyone is covered in an attempt to build resilience for the entire industry.
So, for a very long time, we've been operating under CIF, right?
Yes.
Now there are new terms here, FOB, CFR, and what does that mean? Because one asks the question then, I've been operating using CIF, that is what I know. My business has been easy because I just, the seller on the other end will do everything, right? So now when I am discussing with, say, my supplier on the other end, how does that conversation happen between me and them? And insurance that is happening, is there renegotiation? Is there new terms of service? How do we handle it? Because it ought to be clear on how then we're moving forward. I want to import a vehicle, Sawa.
Yes.
I've been using CIF, but things have changed locally. How do we negotiate that?
Okay. Yeah, CIF, just to break it down, means cost, insurance and freight, yeah. So our advice is to remove the I in it. You see, when you import on CIF terms, it means that you're already bearing the insurance cost. Okay. Since also the seller on the other side, or the manufacturer, has already loaded insurance costs in the cost of the goods. So anyone who is doing importation, some will prefer free on board, which is FOB, or cost and freight. But without using a lot of jargon, anyone who is doing importation and maybe you're using a clearing agent, or you're communicating with the seller or manufacturer directly, you just ask them to remove the insurance bit. And you can even share communication from our regulator, IRA, that indicates that marine insurances will be taken out from Kenya, so that you don't have to pay on the other side. Now the cost saving is what you're going to use here now to pay your local insurer for that. Yeah.
And what are some of the areas that are being covered by this insurance? Because fine, I'm gonna still go back to my phone. I've bought my phone, it's coming, right? What exactly is covered? Are there different versions of insurance that one can take? So is there comprehensive? Do you just cover for? So what sort of different insurance within the marine sector does exist for an individual? Or is it just blanket?
So first, the main definition of marine cargo insurance is that it covers against physical loss or damage to items now being transported either by sea, by air, and as an extension by road and rail up to the final destination. So there are various classes, just like what we have under motor insurance. A cover might be comprehensive, another one is like intermediate, and another one is basic, like the third party only cover. So the same thing happens with marine and also on most of the policies. So you'll find there are terms we call institute clauses, the ICC clauses, institute cargo clauses. So those clauses, we have A, B, and C. Okay. So A is the all risk policy, which means it's a wide cover. It's the widest cover. Of course, it would have a few exclusions, like talk about, like, say, inadequate packaging. But it's actually an all risk cover, covering against anything that is not excluded, with only a few exclusions, just for anyone to take caution when they're handling goods. Then we have B. So B is a downgrade. It's on named perils. So you find that it might be having a few specified perils, like maybe storm, rain damage. So there are only a few. It's not an all risk kind of cover, but it's an intermediate level. Then you have the basic level, which is C. So C is now the most basic, just to cover a few perils, for you to be able to bring the goods into the country. So at Liaison Group, we always advise someone to take the ICCA, the risk package, because even when you compare in terms of premium, it's not much, and when you do your risk management, the cost is worth it.
So that would mean I need to come just before and after, right? So say I've imported a vehicle, the images that have been sent to me by the seller as proof of documentation, some of the documentation that I have, all 360-degree camera, we have my rear view mirror, the taillights, everything is intact. By the time it gets to the port of Mombasa, that ought to be the same product that I get at the port of Mombasa. So if anything is missing, you cover that.
Exactly. Yeah, everything would be covered. And you see, some inspection happens at the port. So if any damage has been established, it means you're supposed to be compensated. Yeah, sometimes we do have some packages that is not easy to notice of damage. Maybe once the item is here, maybe here in Nairobi is when you discover, oh, this and this have happened. So like at Liaison Group, we have some extensions that are able to take care of that. Like there is a clause called concealed damage extension. So if you have that, even when you discover after the inspection, you also due for compensation. Yeah.
Okay. So how do you engage for an importer before they're actually starting to bring? What are some things that you would advise them before they filled out this form or started into the business?
Okay. Yeah, when we advise importers, and actually we've been having several engagements with them, just sensitizing them about what's happening with these reforms. So first is to make sure that the documentation is correct, because once you take up insurance and you have a marine certificate, it goes for approval. The details need to be correct. So IRA gave a directive that the basis of marine cargo insurance will be the IDF document, that is import declaration form. So that document, the importers through their clearing agents and others have to make sure that it's accurate, because that will be the basis of insurance. Also, we also talking to clearing and forwarding agents to let their clients know of the insurance cost element on the other side of the sellers or the manufacturers, so that they can deduct those expenses and then replace that with the local insurance. Because if you go ahead and insure on behalf of your client under CIF, they are already incurred, and for you to be compliant, the client still has to incur a premium on this other side. So those are some of the things we're asking them to look at before they start the importation process.
What are some mistakes that some folks actually make in filling out this declaration?
That IDF form is prepared and then it is approved by KRA. So if some mistakes have been overlooked, it means a lot of correction has to be done, both on the IDF and on the marine certificate side. So since it's the main document, not so many mistakes, but just errors here and there.
What are common ones that they do make?
The details about the importer, details about the sellers, or the description of the goods. And you see, even in insurance, description of the product is actually, the product is a subject matter. It's a key thing. So description has to be accurate on the IDF form. Yeah.
So I have seen a supplier on the other side, Guangzhou. Yeah, we've had a discussion with the supplier. It is then being loaded. Does this cover protect my goods from the warehouse, or just when it is on the ship?
Okay. It depends on many factors, and that's where ourselves as insurance intermediaries, we play a key role. We have to advise our clients on how to insure. There are two main ways of insuring. One is port to port, meaning that I want to insure from Guangzhou, a port there, to a port of Mombasa. Then from there on, I'm going to take the risk myself, or I'm going to get a local goods in transit policy. So that is one option. The other option is warehouse to warehouse, like you've mentioned, warehouse. So warehouse to warehouse means from the manufacturer's warehouse all the way to the warehouse here, where your clearing agent has already booked for your goods to go on a temporary basis. So your goods will be covered, which means even after the port, they'll be on a road somewhere or even on a railway, maybe to our inland port in Naivasha. So the entire trip will be covered on warehouse to warehouse basis. So those are some of the key things that I really point out to clients, so that they don't have to insure in a way they never intended to insure.
Who has that discussion, say, if it's from warehouse to warehouse? Is it the client with the supplier? Where does the insurance then, where does, say, liaison then come in to have that discussion if it is from warehouse to warehouse? Because that would mean with the supplier. Does the liaison then speak with the supplier, or it is me with the supplier with the help of the insurance firm?
Actually, it doesn't have to involve the supplier. In most times, it is a decision for the owner of the goods, the importer. So the importer will share an IDF document, which indicates these goods are coming from this warehouse to this other warehouse, or from this port to this port. So with that information, that's where liaison comes in. Then we advise, why don't we insure on warehouse to warehouse basis, or do you prefer port to port? So it is a discussion between the owner of the goods and their insurance provider, which now, if an intermediary is involved, like the clearing agent, the same discussion can be held with them. They consult with the client, and we make sure the goods have been insured as per the liking of the client.
Okay. So, what losses are commonly covered by insurance? Because, of course, insurance means that in the event that something should happen, then I will be covered. But what are some things that you see? I'm thinking about the sea and storms and things like that your stuff wouldn't get where it's going. But what losses are essentially covered by this kind of insurance?
All right. We call them perils of the sea. They would include storms. Right now, the world is experiencing a lot of climate change, and things are happening. We are seeing flood in Kenya and other places. So the same happens with sea, extreme weather, be it storm. Then the other accidental damages that do occur, we do have collisions. One vessel can collide with another. It can happen on the high seas. It can happen also in a port, and goods can be damaged. We also have other risks like jettisoning. Jettisoning means that a vessel is having issues, is in the high seas. They have to throw some of the cargo overboard. And you'll need compensation if your cargo has been selected to be thrown overboard for the vessel to reach its destination. Sinking of vessels, it happens. It's not only the Titanic, others have happened later. Vessel can sink. It would take a lot of time to recover, and maybe most of the items will be totally damaged. You come to the port area, things happen during loading, during offloading. And when such things happen, there will be some physical damage to the items. So those are the main ones. And just to mention, actually, marine insurance is the oldest form of insurance. Commercial insurance, as we know it, started as marine. So the risks back then were a bit different because maybe technology was not as advanced. So you'd find a vessel disappears, it's off the radar, no one can trace it. Then things changed, the risks evolved. I think a few years, maybe 10, 15 years ago, the major thing was piracy. Somewhere on the high seas, pirates take over vessels. We even saw most of the movies came about piracy back then, for us to get an image of the risks in the high seas. And if you don't pay a ransom as a ship owner, then you lose the entire vessel and the contents inside. So the risks keep evolving. Right now, we are talking about the climate change, and we're also talking about war risks, like what has been happening. Yeah, so those are some of the risks. They keep evolving, but marine insurance has continued to be significant and to be important over the years.
So what does that mean? That you might have a loss because of a flood or because of a collision on the high sea, whatever. But what does that mean? The insurance that I'm paying for, what is that? Will you give me the money back? Will you purchase the goods for me that I have lost? What does the insurance that I'm paying for essentially then translate to in the event of a loss?
Okay. Yeah, there are various ways of making compensation. One, it can be replacement. It can be a financial settlement. So in most cases, since you're already importing goods, it means there might be not so much availability locally of such goods. So in most cases, we do not do replacements of similar items, but we do financial compensation. So that means that we are going to make good of the loss. So you already have your IDF document that indicates that the cost and freight for this product is this much. So that will be the basis of compensation. Of course, like with any other form of insurance, there will be a loss adjuster appointed. So the role of a loss adjuster is to really establish that actually the loss happened, and to come up with the costing as per the documentation you shared earlier. And then we make an offer to you that for this loss, we're willing to pay this much because of this and this evidence that you have attached. So once you accept, we make that financial compensation. Yeah.
So, you see, Dennis, one thing that stands out is for a very long time, many have rather operated with CIF. That has been the modus operandi for many out there. Now we have the new law. The new law has introduced new business for local insurers, right? So then one asks the question, where this is new business for local insurers, are they able to absorb all this new business? Do they have enough underwriters to do this business? Do they have, say, enough information on how things happen on the other side for me to be sure that I'll just be chilling in my house, drinking my margarita, that my goods will get here? Do you have the capacity to do that?
Yes. Okay, for our regulator, the IRA, to implement this, and actually they've been trying to implement, I think, since around 2017, but now it is now live. For them to implement, they have done their due diligence. I mean, the regulators, they have access to the books of insurance companies. They have access to the reinsurance arrangements. So we are confident that that has already been done. The market is ready for that. The insurance companies are ready to absorb the risk. However, risk appetite is different with different insurance companies. So you might find that though as a whole the industry is able to absorb the risks, not all companies might be willing to take up maybe different forms of risk. Like you might find one insurer is comfortable with bulk cargo, another one is not comfortable with bulk cargo. One prefers when the items are containerized from the warehouse to this other warehouse. So, and that's where we ourselves, like Liaison, that's where we come in. So we know the strengths of each and every insurance company. We know their capacity, and also we know their risk appetite. So we're able to match our clients with the best insurers. So we know if you are importing a TV set, and this is the packaging, this insurer might give you competitive rates, but another insurer maybe would be willing, but at a higher rate. So we are able to balance that out and make sure that our clients get the best. So I would say that the capacity is there, the risk appetite is different, but that's why we are there to advise.
So risk appetite is different, capacity is there. But what importers are asking then, with the mandatory local insurance, there is fear that this is going to be costly and expensive for them. That is fear that does exist, because any business person out there wants to make maximum profit on goods that they do have for the market. So is it that the original insurance is just being domiciled home, or is it that these will equally just affect the overall cost of importation?
Okay. In my assessment, I don't think there'll be a lot of change in terms of cost. I don't think the cost is going to increase because one, importers have been paying for insurance, only that they were paying overseas. Yeah, with the insurance companies, they don't know. So if that cost is removed from the importation costs, a client is now able to afford the insurance premium here. And where there might be some cost differences, you see that will be compensated by the risk management also. You will go home knowing that my TV is somewhere overseas and is going to reach here safely. If not, I will be compensated and I'll be able to import a new one. But in terms of costs, we're just localizing the premium. The premium that you are paying overseas, you'll be paying to a local insurance company, an insurer that you're able to access, and you can make a claim in an easier manner.
Do local insurance companies have adequate underwriting capacity?
Yes. I would say they do. Because like I mentioned, there has been demand for marine cargo insurance. It has been doing well in Kenya, only that it was not compulsory for everyone. So you find that over time, we've been able to build our capacity because of the corporates that have been coming to us to insure their goods, because they were worried if something happens and I lose the entire consignment, I need insurance. So we've already built our capacity in terms of underwriting, pricing, in terms of risk management, in terms of marine surveillance, and also in terms of marine loss adjustment. We've already built that capacity, only that we are going to do it on a higher scale. So maybe we are going to need more manpower, more skills to be able to handle the numbers. But the industry is already ready for it.
Yeah. So I've imported my good. It's got into the port of Mombasa. There is the clearance aspect of it. Now, insurance has been made mandatory as part of the clearance. Before I get my good outside Mombasa, then I have to it has to be cleared. Will these make it difficult, like the time spent in clearing these goods, will it be longer? Because that is the fear as well. So one asks the question, just how good, how efficient is the digital aspect of these insurance?
Actually that has been the missing link. There has been attempts to make the marine cargo insurance compulsory for some years. It has not worked because importers were worried, and they raised those issues before, because you would wonder, your cargo is awaiting clearance, and then maybe an email has not reached the KRA desk showing a marine certificate. You see that is going to cause delay, and you see there are so many transactions happening at the same time. So when IRA together with other partners and KRA also, when they came up with that digital platform, that is the solution to that. See, instead of going to your insurance company, obtaining a marine certificate, then sending it to your clearing agent for them to share with KRA for you to clear your goods, it is now easier. The systems are able to communicate. So we have the portal from IRA in the middle. It's called the Digital Marine Cargo Insurance Portal. Then you have insurance companies being able to request for marine certificates from it. On the other side, we have KRA's ICMS system, integrated customs management system, that is able to verify. So you see, you remove the human element that would have taken a lot of time and the mistakes. So once cargo is ready for clearance, the system is already able to communicate with the portal and indicate that these goods are already insured, and so, this is the marine certificate.
So roughly how long, if you compare to the previous the previous clearance system and now where we have the digital system, so what's the difference in terms of days, hours perhaps?
I think it saves a day.
Okay.
It saves a day that would have been spent on communication. Did you send an email? Did you share this marine certificate? When this was implemented for the first time, those were the challenges. It would take a day for you to verify insurance. But now it is already there, and the system is able to communicate with the portal.
Okay.
Yeah.
So in all of this, what is the insurance certificate? What is that?
Yes, the digital marine cargo insurance certificate is a document that is a proof. It's an evidence that cover has been effected for those goods. So it's going to have the details of the importer. It's going to have the description of the products and the period of insurance. So now that information is what reaches KRA in terms of marine certificate. It's a digital and it can be scanned. You're able to verify it, and also the ICMS system is able to identify a genuine certificate.
And it's a requirement?
It is now a requirement for every importation.
Okay.
Yes.
What happens, as with humans, when there is an error on this certificate?
Yes, errors might occur, and mostly from the import declaration form. If an error happened and then it has been corrected later, it is also important that you inform your insurer or your insurer intermediary to also make the change on the marine certificate, so that when the system is doing the verification, the details are matching.
So with an error on a certificate, your goods can come into the country and be cleared or not?
I think with the, you see, unless there is an issue with the IDF document, there can never be an issue on the marine certificate. Because you see, we're using the IDF form in a digital manner to transmit the information.
So there should not be an error on the marine certificate, essentially, is what you're saying?
Exactly, yes,
Okay.
yes. And if an error happened on the IDF, it has to be corrected on the IDF and now on the marine certificate for them to be aligned.
Okay.
So can anything move without this documentation?
From the directive and statements from KRA and from IRA, goods will not be cleared unless you have a marine certificate.
Okay.
Yeah.
And for you to get a marine certificate, the IDF has to be there. So if there is an error on the IDF, how easy, how efficient is it to correct that? For one to say there was an error, I agree there is an error, let's fix the IDF, get the certificate clear and go.
Exactly, and there are people at KRA who are responsible for that. So what happens is that you just communicate the error, the IDF is amended, or maybe a new one is issued. So what not to forget is to also inform your insurer to amend the marine certificate. On the side of the insurer, it's quite easy because we are in control of our systems. We'll just make the changes after verifying that the IDF has been amended.
Okay.
Yeah.
So what you're insuring in this case is the goods that you're bringing in, isn't it? And so everybody who's bringing in goods needs or is required to have this certificate. As we know is the practice, in a container, for example, that gets on a ship, I wouldn't be the only one inside that container. You know what I mean? Because a lot of people are not going to fill an entire 40-foot container. So for each and every individual or business that buddies up to get their goods into this container, for example, who gets the certificate?
Okay. What happens is that the certificate is issued per consignment. So if my namesake Dennis is importing a few items, they will be put on one IDF, and then that is one consignment. So that consignment is in that container that you are talking about, and there could be others in the same container. But marine certificate is per consignment basis. So it means that if your goods are okay, then that container, then your goods should be released and do not have to be affected by others.
In that same container, for example?
Yes.
Okay. All right.
Now, where we live right now, the world is a global village where a lot of importation as well happens when one is buying something online. So you've gone to this website, you've seen something you like, you buy it, you import it, it's brought to Kenya, you know. When I buy that from this website, when does this marine insurance feature? At what point will it feature? Because I am paying directly using this website directly to the seller on the other side. By the time it gets to Kenya, when do I clear that? When do I get that if that conversation never happened?
Yes. And it can happen that the conversation did not happen, and now the goods, maybe they're already overseas, they're in the high seas, and or they're even at the port. So what happens is that what would advise our clients is that once you've made the purchase via that website, now share that document with the clearing agent, or if you're able to do it yourself through KRA, do it yourself, obtain that IDF document. Share that share that with your insurer or an insurance company, or go to an online portal like our Liaison Insurance Online. Follow the process and have your marine certificate issued, and you'll be safe.
How do I avoid unnecessary storage and demurrage? Because I think that's the word. How do I avoid those extra costs? You know, so my good is in Mombasa. I don't want to pay for any storage. I just want get in, cleared. I get my goods. How do I do that?
I remember that proverb that you gave me about indecisiveness.
Go back to it.
Make your decision early. You've already made a purchase. You've already paid. Just make a decision early enough and secure your insurance for it. One, not only as a compliance issue. Compliance is only one side of it. For the safety of your goods, for you to be compensated in case of anything. Once you make that purchase, contact your insurer or your insurance agent and share the documents. They'll take it from there. Nowadays, you don't have to do much. With just your phone, if you share a document, like through Liaison Group, we're going to advise you on how to get an IDF. And in a few minutes, you have your marine certificate.
Okay. So what are when you look at the guarantees that are, or, you know, in some cases are not made, how then do you deal with, do you have like a claim system, for example? And what is the turnaround time for somebody who's made a claim on something who's been lost, damaged, whatever the case may be?
Yes, and claims will be actually the determinant factor on the success of these reforms. And there will be issues because some of the clients who will be purchasing the marine insurance for compliance, some of them will not even know who their insurance company is, who their insurance agent is, because you just want to clear your goods. That's why we need to have that mindset that I am doing risk management, so I need to insure my goods. But in terms of claims, I think claims depend on two things. One, how the underwriting was done, how the cover was arranged. Like Dennis was asking about, is it warehouse to warehouse basis? You see, if it's warehouse to warehouse basis, it means the likelihood of a claim being settled is high because we've covered a wider part of the transportation. Number two is it depends on the strength of your insurance broker or insurance agent. So like if you come to Liaison, if you choose to come to our office, we take you through, that's a good thing. You can also do the same in case of a claim. If you choose to do it digitally, we have advanced our systems in such a way that you're also able to make a claim via the same digital process. And like I said, nowadays things have been made easier because there are so many professionals in different areas. So we already have a team of claims experts like ourselves. They're going to, you just need to report, then we take it from there. They're going to advise you on the documentation. They're going to arrange for inspection of the items, and they're going to make sure that you get compensation even without visiting our office. But you can still visit if you like. But we've already simplified those processes.
Let us visit Tunataka Chai. But in the meantime, right? So let's look at the government of Kenya has decided that ensuring goods that are coming into the country that are being imported must be domiciled in Kenya. One asks the question then, why is that important to importers?
Okay. To importers, it's very important because you are able to access your insurer and you can know your insurer. If you're importing from Gonzul, for example, and the manufacturer chooses an insurer for you under CIF. Maybe you cannot even pronounce the name of the insurer. You don't know where to start if something happens.
That's true.
Maybe you have to go through the same manufacturer, but they're so busy doing other things. But in Kenya, you already have experts whose main work is to make sure that you have cover and you get compensation. So one is that you are able to get your claims paid faster and in a more efficient manner. Number two, as a country, we are able to build our resilience. You can imagine if a whole vessel was to sink and we have so many goods coming to Kenya, the impact on the economy. If you're importing a machine, it would translate maybe to employment of a machine operator on the other side. If you lose it, it means you're going to delay that employment. So you see, as a country, we really benefit a lot, and the importers are in the same country, so we are benefiting all of us. Lastly, if you look at even the foreign exchange, when you pay to an insurer in Europe using euros or Japanese yen in Japan, you see we are losing our foreign currency abroad, and instead of preserving it. So it's actually better for the economy if you can retain some of the premium here instead of insuring everything overseas. Yeah.
We've also often heard about insurance penetration and just how many people are taking it up. What does this look like for marine insurance around the country in terms of uptake?
As a whole, as an industry, our penetration is a bit low, below 4%. In developed economies, it's even in the excess of 8% and above. So some of the reasons why they've been doing well is because even for us who are importing goods into Kenya, we take up insurance in their country. So you see, we help build the insurance companies there and insurance penetration figures on the other side. So we are going to see some increased numbers because also when so many people purchase marine cargo insurance and they see their claims getting paid, you'll also think of that TV that you're importing. Now, can I take a domestic package insurance also for it? So in the next few years, we are hoping to see our numbers go up, our industry getting stronger, and as an economy, we will be more resilient as compared to where we are coming from.
I think finally, my question would be a fact that this insurance has been in the country, is now here. How much value has the country lost by overseas insurance, and how much value then does Kenya get to have because of this? And if I wanted to get that from Liaison, where do I go?
Okay. I think as a country, we've lost quite much. I think the first Marine Insurance Act in the UK was in 1906, which means as a country, we have lost a lot of premium. That would be our premium because it has been paid to overseas insurance companies. So we are going to benefit a lot as a whole economy. We are going to benefit. And for anyone who would like to get more information about this, we are situated at Liaison House along State House Avenue or Liaison House in Mombasa. We're also available in the digital space, and we have a team that is always available 24 hours because importation does not stop when we go to sleep. We have a team that is well trained on marine, and we are ready for the market.
Fantastic. Dennis Karanja is the General Manager, Regional Business with the Liaison Group, and has joined us this morning all about marine insurance. Thank you for being in the Situation Room.
Thank you.
Today.
This is the Situation Room, the only way to start your day.